Hey guys, John Polemy here, Actionable Intelligence. Today is Saturday, October 14th, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I'm not a financial advisor. This is for informational purposes only. Please do your own due diligence. It's your money. It's your responsibility. So starting off, obviously, there's a lot of discussion around the bond market, interest rates, inflation, if we're going to have a recession, if we're not. This is from Jesse Felder, his tweet this week. He was quoting Paul Tudor Jones, who's a pretty successful hedge fund manager for several decades. And I think this is pretty interesting what he says here vis-a-vis the bond market and the government debt situation. The bottom line is the government's spending too much money. They're spending more money than they take in, which is fine. Like, during a world war, or, if the Yellowstone caldera blew and wiped out, a bunch of states, that's different. But in normal everyday business, we're operating this country in an untenable manner. And now we've had 3 down years in bonds and government bonds, which is unprecedented. And so I like this quote here. It says, you get in this vicious cycle where higher interest rates cause higher funding costs, cause higher debt issuance, which causes further bond liquidation, which causes higher rates, which put us in an untenable physical position. So I know there's a lot of people, because you've written to me in the past, some of you, that you don't understand that when rates go up, bond prices go down. I've been asked to do a class on that. I mean, you can go to Investopedia and they will explain to you what happens, why bond prices go down. They lose value when interest rates go up. I mean, they're fixed income instruments. So if you have a 3% bond, okay, and bond or interest rates go to 6, it's obviously people are going to get rid of the 3% bonds and buy the 6% bonds. That's basically, in general, what the thinking is. And then there's no demand for the lower interest rate when you can get a higher interest rate. So that's one reason. But the thing here is that, with the debt that we have to issue more bonds. And we've talked about this before. No one's buying this. The former buyers are, a lot of foreign governments. And because of the geopolitical situation and some of the choices that we've made as a country and how we're going to deal with the rest of the world, a lot of countries that used to buy our debt are no longer doing that. And so, in order to attract demand for the increasing supply, you have to raise rates, or rates have to go up to entice people to part with their capital. And this starts to create a vicious circle. The bottom line is the government spends too much money. And as I've said before, I don't think it's going to stop. Some people are optimistic, or they say, well, we need to have bipartisanship, or the two-party system's failing us. We need to have it. That's not going to work. What constituency is out there? Who is running on a platform of cutting the debt? I'm talking about major cuts, folks. This is not hyperbole. I'm talking about the defense budget being cut by 90%. I'm talking about entitlement reform. Okay, what does entitlement reform means? It means freezing cost of living. It means means testing. That means a lot of people are going to have to be told, you paid in, but you get nothing. What constituency, what voter block is out there for that? Okay, that's not how things work. First of all, most people have a skewed view on how all this stuff works. They think these things are, like an IRA, for example, Social Security benefits. Even if you're a millionaire, you should get them. So the whole system that was created before, because there's no reform, there's no looking at things the right way. This is what happens in a democracy. Okay, people are going to vote themselves the treasury, and so there's no constituency. There's these huge uh, donors and and blocks there in DC that just feast at the government trough, and that's who controls things. And they're not going to, the defense companies that give tens of millions of dollars to Congress and to these different people that are running for office, that they don't care what I think. Okay, they don't care what you think. The defense budget's going on at almost $1 trillion a year. The stock prices are at all-time highs, and they're not going to, they're not going to shut that gravy train off. That's one. If you could forget about entitlement reform, it isn't going to happen. Okay, and so what I'm trying to get across to you is that this is untenable. It's unsolvable. Okay, it cannot be solved. Again, I've said it before. That which is politically possible is not sufficient to solve the problem, and what is politically, it's just not going to work. Okay, and the things that you could do will not solve the problem, and we may have crossed the event horizon into the black hole where we can't escape. So I've said this before. I just wanted to mention it again briefly because it ties into my other thesis, my view on how things are going to play out over this decade. Is it actionable for next week's trading? No, but inevitably we know what this leads to. So this is Treasury issuance trailing four-quarter sum of flows, net of Fed and foreign purchases. So here you have the debt issuance of the Fed going up here. Okay, here's foreign purchase of treasuries. Okay, which is kind of down from what it has been in the past. And what are they going to do? They're going to print inevitably. Okay, you can see that as this unipolar world dissolves into a multipolar world, and these other countries begin to coalesce around this BRICS environment or a global South, global East, they have no interest in being involved with the United States. And the United States is, like, again, running a playbook that doesn't work anymore. Running around, threatening people, doing this, doing that, it's not going to work. And I don't know, most people can't seem to see it for some reason. They are running on this, we're running on inertia and a former glory. It's like the Bruce Springsteen song, Glory Days. I mean, you're this broken down dude in the bar talking about, 45-year-old guy talking about, the football plays that you made in high school football. Those days are over with, and you have to face the new reality, and we're not doing that. The simple fact of the matter is that our fiscal situation is tenuous and doesn't allow for us to be the hegemon in the world. And yet we're going to continue to do that. And you saw that in the last week, which I'll talk about later, with some of the reaction from this situations that are happening around the world. We talk about, this is from this website, John Galt, Florida. I thought it was interesting. I've put this into my tracking index now. It's federal government current tax receipts, personal current taxes. Well, look what's happening. Okay. Not good, right? Says the last time a decline happened that was this steep was during the pandemic. If retail sales are so strong, the consumer so strong, then why are personal current tax receipts collapsing? That's a good question. A lot of it has to do with losses or the markets not really performing. A lot of the I think you see the same thing in the state receipts also. And a lot of it's because as rates have went up, a lot of this nonsensical ways people were making money in venture capital and startups and that kind of crap, that's kind of just evaporated, right? And a lot of the easy money, free money, misallocations of capital that were creating a lot of fake wealth has dissipated. And that's going to be another fact that people are going to have to deal with, that, real economic activity now is going to usurp fantasy land and fake economic activity, just because of the fact the cost of capital is going to be much higher going forward. simply aren't going to be able to make all these malinvestments and these goofy ideas that, somebody's, vanity premium vodka brand isn't going to get financed. We talk about this job unemployment and that the employment is holding things up, which is true, but what are people doing? It says people holding 2 full-time jobs is at an all-time high. Okay, people are struggling to make ends meet. We see that anecdotally. We hear about it. We know that people are living off credit cards now. Credit card debt I think, has crossed $1 trillion now. Defaults in credit cards and auto loans are increasing. So we look at just the headline statistics and say, okay, well, the jobs growth for this particular week was good, but what does that really mean when you lift the hood up? What are you really seeing under the hood? And things aren't that rosy. And I maintain my view that the lag effect is slowly but surely constricting. The previous rate increases are slowly making their way through the economy. We still have more wood to chop there, but eventually the higher cost of capital is going to make its way through the economy and make itself felt. So I wanted to talk about this. I like to show the Buffett indicator once in a while. This is the market value against GDP. Buffett has mentioned this before. I like how this particular site shows the standard deviations above the historical trend line. You can see that we're still, in overvalued territory. We're not strongly overvalued like we were in past. If you look at past times that we were in the strongly overvalued area, it resulted in a reversion to the mean. Now, you don't just go to this historical trend, you go below it, right? Things always overcorrect once they go too far in one direction, they correct and overly correct in the other direction. And I think that we're in the middle of that, and we haven't felt the full effects of that. I mean, why would you think that this historic overvaluation that we've had, which is the greatest, at least in relative to this indicator of all time, basically, is just going to be resolved with just going from strongly overvalued to overvalued? I don't think that's the case. And so, GMO, we show this chart, they update it every week. This is your forward returns, and this is really kind of based on, interest rates, historic overvaluation, the overvaluations that we have, and how that ties into what you can anticipate going forward. And again, we sell here at the Actionable Intelligence Alert newsletter. I look to sell overvaluation and buy undervaluation. That's not always popular. That's not the shiny object. That's not the most popular thing to do, but that's what I have found to be the most successful course of action. And so you see here that these are your forward 7-year return forecasts. And, just U.S. stocks are forecasted to have negative returns every year going forward. Now, that doesn't mean that you won't have one year where the market's up 20%, but then you could have, the following year down 30%. This is kind of averaging out over the next 7 years. That if you took the overall return you got, it would average out to, negative annual returns. And so that's a situation I think that you don't really want to be involved in, right? Again, as I've been talking about, emerging markets are undervalued, and I've been moving more and more money into what I consider undervalued emerging markets. Now, people will push back and say, well, with a strong dollar, emerging market currencies and debt has issues. But I concede that. But again, I think that the rate raising cycle in the world has peaked. And I think it's showing up in my data when I look at central banks. Yes, a lot of secondary and third tier central banks are cutting rates, but your major economies will, they were the last to raise rates and they'll be the last to cut rates. So the trend is definitely, that I think peaked as far as rate increases around the world, tightening, and I think that going forward, you're going to see more tack towards loosening fiscal or monetary policy around the world. That's just what the data shows. So inevitably, I think that once the U.S. gets into a rate cutting cycle, which it will inevitably, as as the effects of the previous rate increases, we get a recession, which is inevitable in my view. Then they will cut rates, and then the dollar will be under pressure, and so that will be positive for commodities and emerging markets. At least that's what previous intermarket relationships have shown. So I'm not that worried about it. There are scenarios where you could have a full-blown hot war between going on in 3 or 4 places, and all the capital rushes back to the United States into perceived safety of the United States, which would force a dollar. Yes, there are scenarios like that, but I don't see with the current situation physically and economically in the U.S. that this is the best safe haven anymore. Okay, I just don't see it, and I think the trend, again, there's a lot of reputation there. People think that it's like a restaurant that you used to go to for 20 years and then it changes management and they cut the quality of the ingredients, and you keep going there for a while because you're like, what happened? I'll give it another. They changed management. The meals suck now, but I'm going to give it a couple more tries because, and then you finally get it through your head that it's not the same place. That's my view of the United States. I believe the United States has a lot of issues. We've cataloged them before. There's no need to go through them again. That do not indicate to me that things are going to get better. Things are going to continue to devolve here, in my view. And that makes it hard because it doesn't say that these emerging markets are any better. A lot of these places are risky. They have unstable governments. They have unstable financial situations. But are you compensated enough because of the undervaluation that the risk is appropriate? Each person's going to have to make their decision. I can't do that for you. Yes, the United States is still a good place to put capital. I think that there's certain states I would stay out of, but it's not all doom and gloom. It's just a slow slide, which is what you see in empires throughout history. It doesn't happen in a year or so. It happens over a period of time, and but if you can see that trend early, I think you can, especially with the ubiquity of air travel and the internet and the ability to move money around, why wouldn't you at least look around? I still don't understand why people don't do that. This home country bias is very, very strong in most people. So this is Steve Blumenthal. I get his emails every week. I suggest it's CMG Capital. I think he puts out this free emails where he ties in different things, different like Ned Davis and all. I mean, good discussion every week. I have found from his emails. And this is his near-term framework, which I wanted to go over, which he had in this week's email. I thought it was good. It kind of, I really, it really lines up with a lot of things that I'm thinking. So I just wanted to go over this because he really articulated it very well. So let me go through this. So what are we seeing? Let's see the near-term framework. Too much debt and an acceleration of debt are stressing economies. So, okay, we agree on that. Inflation has forced the Fed's hand. Higher rates and rising bond yields are poison for budgets. Yeah, I would say that. I would also say that, well, let's go on to the next one. Rising rates are causing problems in the system somewhere. We expect something to break, i.e. regional banks, credit unions, or something else. I would say commercial real estate or high yield debt is in that same bucket. I like what Adam Taggart says at Wealthion, that higher rates are like a more, the higher rates go, it's more of a gravitational pull on the economy and on the markets, right? Especially our markets in our economy, which has been habituated to basically zero rates, and now you've raised them 500 basis points basically in a year and a half, and like I said, we're still working through those rate increases into the economy, so that gravitational pull is increasing. Inflation and higher rates are impacting the system. COVID cash is gone. Expect the economy to weaken. Agreed. All of this is a headwind for overvalued equity markets. Agreed. We are overvalued. I think we all would agree on that. A weak economy means inflation and interest rates will likely decline. The end of inflation wave number one. So this is exactly what I'm saying. Something's going to break, or the market's going to be down 30%. I don't think it'll be down. Fed's not going to do anything till things really get ugly and everybody comes and prostrates himself and begs them to cut rates. I don't think they're going to be able to get rates below, or I don't think inflation is going to decline to 2%. It's kind of like when you do weight loss, if you're trying to lose 20 pounds, the first 10 pounds is easy, then the last 10 pounds is hard. I think we end up at some place around, 2.5, 2.75, 3%, or maybe a little bit higher than 3.25. They just won't be able to get it down because remember, we have underinvestment in commodities, particularly energy. Energy feeds into everything. That's going to be a floor under the inflation rate, in my view, over time. But we'll see. And so at some point when the markets are down, when things are really ugly, then people will say, we got to cut rates, and there'll be all this rationalization that even though inflation's not back to 2%, which is the stated goal, we still somebody has to do something. That's what it'll be, right? And so the Fed will step in and do what it has to do. And then we go to the next bullet point here, which is the next market dislocation, which could see equity prices drop 20%, will cause the Fed to change direction, of course. It's what they always do. They're going to keep running the same playbook. There's nothing new. They have no secret tools in the toolbox. They're just going to keep doing what they do, what they've always been doing. And the next bullet point, that should stimulate asset prices and cause a new bull market in stocks, the beginning of inflation wave 2. So this is in the context of what we saw in the 70s, right, where you had these 3, I think, inflation waves through the 70s that were precipitated by exactly what we're talking about here, until at the end of the 70s, early 80s, when Paul Volcker came in and raised rates to 18 or 20%. I've told that story before about the T-bills and stuff. The other thing I think people forget is Volcker gets a lot of credit, but a lot of credit should go to the election of Reagan and a change in policies. There was an extreme amount of deregulation during the Reagan administration that really caused a lot of prices to go down, caused a lot of inefficiencies to be wrung out of the economy, which caused prices to come down. And I think that had probably just as much or even more of an effect on the inflation rate. And you could see that, nowadays, we have a more statist leaning administration, a Congress that at least on both sides, I would say, are very statist. And so, you would need not only just to get that inflation really down, you have to reverse some of these policies. You have to reverse the energy policy. We have to open up and get as much energy as possible to get the price of energy down, because energy is an input into everything. And so we're doing everything we can to make it more expensive. Now, this is good for us as investors and speculators because we see this. We're able to take advantage of that. But for the overall economy and the average Joe or schlub, bleacher bum out there, they don't have a clue. You say, well, gas is $4.50 a gallon. Somebody do something. They don't, can't put 2 and 2 together. So, the Fed will run the playbook like they do, and then you're going to get another wave of inflation. Will it go as high as the previous one? I don't know. The future is unknowable, but that's kind of, I think, the same playbook we're looking at, right? Which is eventually the economy is going to crack, something's going to break, the markets will be down big because they're overvalued now. They need to go down substantially to become even fairly valued, much less undervalued. And there'll be screams in, renting of sackcloth and putting on, renting of clothes and putting on sackcloth and all that stuff in the streets, the financial areas of Wall Street when that happens. And then the Fed, because it's not there for you or me, it's there for the banking system and the bankers. It will respond as it usually does. You'll have another wave of inflation and asset price appreciation. And then he goes on to say here, a system-wide debt and pension system restructure sometime in the decade's second half. I'm not sure about that. I don't think there's, again, you're going to have to see a complete collapse or near collapse before you're going to see any political will to do anything. There's just nobody's going to say, well, you know what, this $100 trillion in Social Security and Medicare that we're on the hook for, we really can't pay for. So we need to restructure this. No one's going to do that, because the people that are expecting those benefits, again, they are under a misconception that they paid into some type of annuity and they're going to be paid out. That's Social Security and Medicare are welfare programs that are legislated by the Congress. That's already been decided in the Supreme Court. I keep telling people that. Go to Thanksgiving dinner this year and tell your older relatives that Social Security is not a right. It's just a benefit subject to the whims of the Congress. They will get very upset and argue with you. But right on the Social Security website, administration's website, they talk about this. And people just, it's like kind of like I think what Will Rogers said, it's not what you don't know that gets you in trouble. It's what you don't, it's what you know that just isn't true. And so there's this very high expectation for these things, and people haven't really planned sufficiently. Most people haven't planned sufficiently for their future because they think there's some kind of net under them, right? They're walking this trapeze act, and so there isn't one really. It's based on the whims. So ultimately, there's no constituency to fix these things. And so what you will see, as I've said before, is not reforms. You'll see higher taxes, raising of the age for benefits, means testing, printing of money, all bad things that just erode the value and make it easier for the government to pay. I mean, you just have to go back and watch the Ron Paul, Alan Greenspan testimonies when Alan Greenspan was at the Federal Reserve. I've talked about this many times. I'm shocked that people don't know these things. He said that Ron Paul challenged him on all this math. So this just is not tenable long term. That the math doesn't pencil out. And he was like, I agree. And then they said, well, the benefit. He said, what's the plan? What's the deal? And he's like, well, we have this thing called a printing press. The benefits will be paid, but I do not guarantee the value of the dollars that the benefits will be paid. And so there you have your answer. That's the answer. So prepare yourself for that. That's what I tell people. And most people don't. Most people have their time preferences are not skewed properly. And they think that somebody's, deus ex machina, somebody's just going to come in and save them, I guess. I don't know, or they just don't care or think about it. And, it's not going to work out. The problem is that a lot of these people that are expecting these benefits actually do vote, and they're a very large block. And so politicians will play to them, and they'll, the math does not pencil out, yet they will stand there and lie to you and say, we got this, or we're going to give, this is sacrosanct. We're not going to. Well, that's fine, but you can't have $1 trillion a year defense budget then. Okay. You just have to pay. And with the interest on the debt, I mean, you see, this just isn't tenable. Okay. Long term. And so we'll see what happens. But I kind of agree with most of these points. This is kind of the framework I think that you should be looking at. Again, we're not in, this rolling recession, I think, is what we're in now, certain sectors. I have to admit, housing has kind of turned down, but now it looks like manufacturing has ticked up. It's still below 50% on the PMI, but it's been ticking up the last 2 months. So it's very confusing, uncharted territory we're in. But I think a lot of this has been papered over with the fiscal spending of the federal government, which I think is going to be more difficult going forward for them to do. And then I think the manifestation of the economic forces to the downside will start to impress themselves upon the economy, but we'll see. So I wanted to put this up here. This is from UXC. They track the uranium market. I just like this term in quotes, extremely tight. It says UXC President Jonathan Hines tells MarketWatch the uranium market is, quote, extremely tight over the next 12 to 24 months as demand continues to rise, quote, while new supplies are taking more time to materialize and inventories keep getting drawn down, unquote. Nothing that we didn't know, just more confirmation Again, we're hopeful that we get a critical mass where we can see the institutional money start coming into this market. It's so small, but I think the vehicles are now in place with obviously the Sprott Physical Trust, I think is going to begin trading on the NYSE soon. And also you have the uranium miners ETF. So there are ways for capital to enter into these markets. And I hope that as this news continues to get better, as momentum builds, that it draws in. We need that institutional capital to really push this thing to the next level. Right now, it's kind of at the whims of the retail, and the retail is like, chasing shiny objects. If there's activity and news, then they come in, but they get bored very easily and then move out. So we'll see. But again, I maintain my long-term bullish stance. This could be interesting. I'm seeing more and more articles about the fact that diesel and distillates are getting more and more scarce, let's put it that way, relative to what they should be at this time of year going into the winter. And so this is good for product tankers, by the way. That's one thing that's good. But we're seeing the crack spreads. This is how much you get paid for processing a barrel of crude, and it shows the diesel crack margins for Asian refiners are very high over the last several months. You see what the 5-year seasonal averages were way above that. That's an indication that's telling the refiners to make more diesel. The problem is that you can't just take a barrel of oil and convert it entirely 100% to diesel. There's other products that are made from it. And so if you process more barrels to get diesel, you get more gasoline and other products, jet fuel. And if you don't have use for that, the price of those products goes down. So again, another very interrelated market that's not just easy to look at from the top down. This also plays into the fact that we are very rapidly heading towards the winter season in northern hemisphere, particularly watching Europe, where distillate is used in a lot of places as heating oil. So we will see how that plays out going forward. Obviously, with the mild winter we had last year, things didn't go like we thought. I'll be interested to see what happens if we have a normal winter in Europe, or God forbid, a severe winter, to see how the Europeans deal with that and what it does to many of these markets. Have thermal coal turning up recently in China. Again, I'm very, it depends. Let me backtrack, rewind the tape here a little bit. So, in the newsletter, we just have a speculative coal play. That's a met coal producer that's just now coming online. But in my personal portfolio, I am very bullish on coal. It depends. I'm in my late 50s, so I'm looking for a lot of income and things that are going to produce income for me. I'm not necessarily, yes, I still go for the 10 baggers, but I'm more skewed towards income producing. And I really like this whole coal thesis, which we've talked about before, with the ESG movement, with the inability to bring new coal mines on, at least in the OECD countries. Obviously, demand for coal is going down in Western Europe and the United States as they try to put coal out of business. It just keeps increasing in the global South and East. Why? Because it's ubiquity, it's ease of transport, how quick it is to build coal plants. I mean, coal's not going away. So all the coal that you don't burn in the West is going to get burnt in the East and South. So that's just a fact. And so, with the lack of ability to finance new mines and permit new mines, I think that you'll see these BRICS countries will step up and do it. They need the coal. I've already seen news. I can't remember where the mine was, but the Chinese financed a coal mine somewhere. I think you'll see more of that. So I do think there's an opportunity, though, because I think a lot of the coal assets in the West are going to be cordoned off. It's going to be very hard to develop them. I think eventually they will be, just because if you get into full-blown energy crisis, people are going to demand that, I think rational leadership eventually returns. But in the short term, I think in medium term, I think it's an opportunity. They pay very high dividends. I don't want to say they have a moat, because again, I think that at some point, these BRICS countries that need the energy, India, China, countries like that, will step up and finance the development of mines, at least the ones that are outside the West. But it's worth watching, and you can get double-digit, return dividend returns right now. So a lot of people have made the comparison to how well tobacco stocks performed, even though it was an industry in decline, and heavily regulated and taxed. It had some of the best returns. So it just, think, depends where you are in your life cycle, what your investment needs are, goals are. But again, most of these coal stocks that are producing, they're throwing off tons of cash, and it's being returned to shareholders via buyback and dividends. And like I said, a lot of the dividend yields are into the double-digit range. So I don't think coal's going away. I track, again, I've talked about, you can look at all the new mines that are being built, especially in the global East and South. We've talked about why that is and why it will continue. I think that there's a window of opportunity here, especially if you want cash and are looking for that. Now, would I go 100% of my income portfolio into coal stocks? Absolutely not. But I think it can be part of that portfolio if that's what you're so inclined to. So again, we've talked about this before. This is the, predicted copper shortfall that's coming. I'm wondering now, I've kind of tempered a little bit my enthusiasm for copper. I'm still bullish on it, but I'm wondering now, with ESG kind of peaking and going into decline, which I'm suggesting it is, these climate goals are simply not going to happen. People are pushing back against them. I'm starting to see this facade start to crack, and people just aren't buying it anymore. They don't want higher priced energy. We've seen projects get canceled. We've seen a lot of these former ESG funds or companies that are basically in this energy transition market, if you will. Their stock prices are down quite a bit. They're just not good investments. These things are intermittent energy. They have an appropriate place in some areas of the world, but you're not going to power the entire world with these things. That's just stupid. It's not going to happen. It won't happen. There's not enough material. We've went through why that isn't going to happen. So I'm a little curious now if, I do believe that just because of the underinvestment in copper for the other uses of copper, the big thesis was that we're going to have so much of a build out for this energy transition that copper was going to, be the new oil, if you will. You've heard these things. And so with ESG kind of receding quite a bit, will we have the same demand kicker? We'll still have the underinvestment will still come to the forefront, and mines are depleting and there's been insufficient investment. But will we get that added kicker of this energy transition copper price push? I'm not so sure anymore. So again, I'm not going to get political. It's just, I find it amusing about how quick politicians are to be hypocrites when it's politically convenient. The last thing that this administration wants going into the election year, or the Democrats want, as they try to take back the House, is gasoline above $4 a gallon, which I think is a relative possibility. I still think that there's a possibility that you're going to get a surprise from OPEC Plus to keep holding the production cuts in place, and even for the Russians to accelerate that closer to the election to force gas prices up and put more pressure on this administration. Obviously, that's supporting their enemy in a war that they're currently in. So these tools are available. So what I find interesting is now that Venezuela, that had all these human rights abuses, and we were going to sanction them, and they were bad people, yada yada yada. I'm not disputing any of that, but now it says U.S. Venezuela in talks for fresh oil sanction exemptions. So we know already that Chevron has been granted some exceptions, and they've slowly but surely been increasing production in Venezuela. This Venezuelan crude is actually kind of is really appropriate for the Gulf Coast refineries. The crude that comes out of the shales, basically a lot of it gets exported because it's a more lighter crude that's not really, its makeup is not the best for the way that the refineries are structured down in the Gulf Coast. Mostly the Gulf Coast refineries take in more sour crudes that have a higher sulfur content, and they prefer that. So this Venezuelan, Mexican, Saudi crude, stuff like that, and then we export our crude to other countries like Europe or other places where the refineries are structured for that type of crude. So I find this interesting. I put this kind of quip at the thing: is Venezuela the new SPR? We'll see. Again, politicians are only interested in one thing, and that's to get reelected. They'll say or do anything. They'll change their views on a dime. They'll say, they'll lie, they cheat, they do whatever they need to do, all of them. So I just find this amusing that this is what we're doing. Nothing actionable here, but just another confirmation that these people are who they are. So this is from Tavi Costa at Crescat Capital. He is Brazilian. He's been hot on Brazilian stocks. I'm becoming more and more bullish on Brazil and Brazilian stocks and other emerging markets. He shows this, you can always, you have to take a lot of these type of charts with a grain of salt. It's like Brazilian stocks as a percentage of the global equity market. Well, what does that really mean? You can find any data set to kind of confirm whatever you're trying to sell, but it is worth looking at. What I find interesting here is this is basically Brazil stocks basically outperformed global equity markets and became a higher percentage of the global equity market during basically what consisted of the last big commodity bull market that peaked in 2008, 2009. Okay. At one point, they were over 5% of global equity markets. That makes sense, right? Because of the bullish nature, the effects that it had on the Brazilian economy and Brazilian stocks over a period of 8 years. The went from under 1% of global market cap to over 5%. Could that happen again? Well, considering the fact that we are in I believe the beginning stages of a new super cycle in commodities. Yes, I think that could happen again. That's one of the reasons why I'm been tiptoeing into various emerging markets, specifically in Brazil. And so I feel pretty good about it. Again, we talked about high dividend yields. You can buy Petrobras, and I think it's still paying, I don't know, close to 20% dividend or something like this. So do I own some? Yes, I own some in my tax-free account, my income account. So, people I think say, well, Lula got elected, it's going to be a communist country. I don't really see that. Again, if we have the super cycle that I'm thinking we're going to have, or higher prices, at least over this decade for commodities, that will overwhelm even, I think, a lot of what politicians there can do. They didn't exactly have a super duper market economy during this time. You had, I think Lula was in power during this time too. I'd have to check, but regardless, this was the last, basically, when China entered the World Trade Organization and basically went through its huge, it was basically like a black hole sucking in all the commodities. And you saw what happened. Brazil obviously is endowed with a plethora of various commodities. So I suggest it could happen again. We've had over a decade now of underperformance in emerging markets. I've talked about that before. I just see a lot of positive tailwinds to emerging markets and Brazil in particular. This is interesting. This is NextEra Energy stock chart. You see NextEra, I think, is one of the biggest, if not the largest, public utility or company that had this renewable energy push. And you see how the stock performed over that period of time. And then you see basically over the last several years, when we got to peak ESG, and then you see what's happened recently. Okay. You see I just ask you, not your opinion on CO2 or global warming. I ask you one question. Would you buy or sell this stock looking at this chart? Would you want to own this stock for the next 5 years? I would not. This is a definite sell signal. You don't have to be much of a technical analyst. So I think I show you this just as a cautionary tale. And we're seeing this happen to a lot of the producers of wind turbines, a lot of these companies. I mean, we're finding that the selling point, which was subsidize us, help us get a foothold, and as we increase the build out, the prices will come down. And that's not the case. The prices were down because we were in a commodity bear market, so the materials that went into these things were going down in price, and we had 0% interest rates. Those two things are reversing now. You have high interest rates. Okay, so the hurdle rate, I mean, all of these projects have to be financed. Okay, and if your capital cost is much higher now because of the input prices and the inflation around wages, labor shortages, all kinds of problems, then you couple that with higher rates, and your hurdle rate to make the project viable is much higher now. And that's why they're asking for more money. That's why I think there was a project offshore of New York State, and they said, well, because of just what I said, rates being higher and commodity prices, input prices being higher, we need a higher megawatt price. And I think it was like pretty substantial increase. And the state said, no, absolutely not. So the project got canceled. You're going to see more of that. This is an industry, I hate to say it, that basically was the beneficiary of like federal, of a combination of federal government subsidies, 0% interest rates for over a decade, and a commodity bear market. And all of those things are reversing now. And so this is what you're going to see. The market has figured this out. And, in the end, the bottom line is the bottom line. So I wanted to put this up here. This would be the time that if you don't like my commentary on politics or my worldview, you should probably switch off. I don't really have much to say about the situation that's happening in the Middle East. I think it's terrible. It's not good to see people killing each other for any reason on either side. It's a bad thing. It was a bad thing. That's the ongoing things that are happening in Azerbaijan, is it liquidates the Armenians and pushes them out of a particular state. Okay, that doesn't get any press. It's a bad thing that the continuing situation in Eastern Europe, in Ukraine and Russia, the fighting that's going on there. There's hot spots all over the world where people are being killed. What I find interesting is I found this meme. I like this because it's the new thing. So, because CNN and the news media, which is in my view, a state propaganda organ, you've now taken this is the, non-player character right here at the top. Basically, they've opened up the back of their skull, which is a lot of people in this country. They've pulled out the Ukraine chip and have now put the Israel chip in. And then, you see here at the last frame, I support the next new cause. The bottom line is none of these things affect our problems here, really. People will make the argument, well, if we don't do this, I'm not interested in those arguments. The problems we have here in the United States are existential to our continuing existence as a union. You've heard the arguments before. Tucker made them. We have 100,000 people dying a year of fentanyl that's pouring across the border. We have an open border with all kinds of migrants pouring across. and we don't know who's coming in here. We have income disparities. We have I can go down the there's a whole litany, and yet we don't have anything better to do than go and involve ourselves in some war in Eastern Europe, or in this 75-year conflict between Israel and the Palestinians. Okay, what potential upside is there for us in this, for the average person? I know how it benefits the elites and the media and the pointy-shoed class and the defense industries and the military industrial congressional complex. I get that. I understand that. I understand how it benefits them, and the neocons and all these little different constituencies that are on the coasts, okay, the elite thinkers. But for the steel worker in Indiana, or the nurse in Oklahoma, or the farmer in Iowa, they have other problems, okay? And a lot of people in this country are struggling, and I don't see why, because this is why I don't watch the news. I don't have a television. I don't allow myself to be propagandized. Do I take in media? Yes, via some other ways. There's ways I try to filter it, but I try to critically think about things. And I thought it was just amazing, the good thing that with Twitter basically becoming more of a free speech platform, you see who people really are. And it's interesting to me see how fast people jump on media narratives. It's like they just don't learn. It's like Pavlov's dog. I'm not going to get into the particulars. There's all kinds of evidence of horrific killings that Hamas made. But you can make the same argument. If you want to dig deep enough, you can see where the IDF over time has there's been non-judicial killings by soldiers. There's been all kinds of things. And so this, why do you want to get in why does the average person in the United States, let me just break it down to the bottom line. I'm not interested in this. I don't care. It's unfortunate that these people are killing each other. I don't want to see anybody die. A lot of innocent people die for no reason. Okay. I can't do anything about that. That's the history of mankind, as this kind of stuff. But it doesn't affect me personally. I don't really have a dog in the fight, and I don't know why I personally would want to get involved, and how what potential upside it is for me to be involved, or the average American person, in a ethnic religious conflict that's been going on forever and will continue to go on forever. Okay. I have my own views on how this should be solved. It's not popular with hardly anybody. And that's people need to, be followers of Christ, and then they won't be doing these things. But that's not what most people want to do. I understand that. So I don't mention it too much, because, people just roll their eyes. Okay, well, roll your eyes. But I don't see, from a political point of view, from an economic point of view, how this benefits me. I find it amazing. You see all these protests by all of these people that we've allowed to come into the West that you can see obviously don't share our views. Okay. They have all kinds of Arab and Palestinian protests in Western Europe and in the US. I saw various videos. And so does that occur to anyone that that's probably not good long term? That you're going to have, people acting out. There was a guy, he was a diplomat in China, was going to work to the Israeli embassy, I think in Beijing, got stabbed on the street by somebody. Okay, so I guess the bottom line is that, for the average person in the U.S., this really isn't your problem. I wouldn't allow myself to get sucked into it. Yeah, you should pray for peace and hope that the people there will be spared, innocent people. But we have our own problems here that we need to focus on. And you see everybody getting riled up on Twitter. I mean, viscerally throwing insults back and forth at each other, and over what? It doesn't affect you. You're not being affected. Seeing, and I've seen people come out of the work like this despicable person. What's his name? I can't remember his name. This young guy that's on Daily Wire. I can't remember his name now. But anyways, people like Jordan Peterson and all these people. I mean, guys, don't get sucked into this. You have bigger problems. You have your own problems. This doesn't affect you. We have our own problems here. Focus on that, okay? Focus on your own life and trying to improve it and the people around you that you can affect, okay? And don't get sucked into these narratives. I mean, we had a guy that was a Palestinian. He was flying pilot for Air Canada. He got fired because, people get all riled up emotionally. You can't do anything about it, okay? It's not your problem. And Ben Shapiro, this guy's a piece of work. I mean, this guy, since he was a teenager, when he first came on the scene for WorldNet Daily, has been nonstop, wanting to have these wars that benefit Israel. And, it's interesting. You have Tony Blinken going over there. He's a dual citizen of the United States and Israel. These are the things I don't particularly care for. I'm not going to get into those discussions because they degenerate into accusations of anti-Semitism and stuff like that. But, and the bottom line is we got big problems here in the U.S. The average person, you're wasting energy if you allow yourself to get sucked into these things. Don't get sucked into the new thing is my advice. So here's Ray Dalio's comments. He just wrote a piece on this. Couple quotes here from the piece I thought were interesting. It said, we should recognize that these hot wars, the Israel-Hamas war and the Russia-Ukraine war, are not just between the parties directly involved in them. These wars are part of the bigger great power conflicts to shape the new world order, and they will have big effects on the countries who are allies and enemies of the four sides in these two seemingly irreconcilable wars. These two wars will cost the allies of these countries a lot. For example, the U.S. is now fighting proxy wars in Europe and the Middle East while preparing for war in East Asia. As these wars spread, they will cost more. So why are we involved in any of this? We have $33 trillion in debt. We have the interest on the debt now getting ready to cross $1 trillion a year, being a quarter of our budget. We are running annual deficits of fixed deficits of $1 trillion that are going to go up to 2 or 3 trillion during a recession. Why are we involving ourselves in all of these other wars? And the idea is, well, we're the world leader. Who said we were the world leader? We have two moats around us. No one's going to come here on landing craft and take over the United States. Okay, we have our own problems. Okay, if these people want to have these wars and fight each other, let them do it. The problem is we're trying to be the world hegemon, and people make the argument that if we don't do it, then the world will degenerate into a place that will be, bad for the people of the United States. I don't believe that. I believe there's always been wars. There will always be wars. And I believe that this is always and always has been these banker wars that are put in place for people to try to, become more wealthy. Okay. In the end, that's what they are. Notwithstanding the fact that you have this religious conflict going on. I mean, do we really want to get involved in this thing and have it, escalate so that, people talking about let's attack Iran now, like people like Lindsey Graham and this Nikki Haley and some of the wild, crazy arguments they're making? Do you really want to have a war? You're not going to, didn't you learn your lesson from the last 20 years in Afghanistan and Iraq? What did we benefit? The Taliban is in charge of Afghanistan. So if you're stuck in a VA hospital, like I know people are, with missing 3 out of their 4 limbs and don't have any sexual organs anymore, and have their face blown off in their warehouse there, I wonder how they feel about it. Probably not too good. How is this benefiting anyone? And so you're right, these things can escalate. Why are we involving ourselves in this? And these crazy people, Lindsey Graham, and these people talking about bombing everybody. So you started up with Iran. How does that work? Okay, let's bomb all 4 of their refineries. So then the Iranians will shut the Gulf. Okay, don't be surprised if the whole Middle East coalesces then, and then oil prices go to $200 a barrel. And then what are we supposed to do? We're going to be in a deflationary depression. Does that benefit you? You're not in a position to, there are consequences to actions, and nobody seems to be wanting to think these things out before they go off half-cocked. I think I had hoped that over the last 20 years of squandering of all the money and all the lives, we didn't get anything out of what we did in the Middle East. And so we're going to go right back to the well. Why? With the same people running the same playbook? Guys, come on. Think it through. Goes on here, says, to push the point home, I want to make clear that I believe that we are in the brief part of the big cycle when the conflicts are heating up and the leading powers still have the ability to choose between crossing that line in a brutal war or pulling back from the brink. You know, he said this in the previous paragraph. He says, the U.S. is now fighting proxy wars in Europe and the Middle East while preparing for war in East Asia. Why are we preparing for war in East Asia? Why is China our greatest competitor? Why do we, this is crazy. Okay, how are you? What is the plan here? We're going to have a war with China? How? How are we going to project power across the Pacific to China and Taiwan when it's like, basically China's right there. Their supply. I mean, you could get into all kinds of strategic thinking. This doesn't make any sense. And the people that are running this, it's just one disaster after another. This administration. Not going to just pick on them, but that's who's in power now. The pullout from Afghanistan was a disaster. They've now walked away from Ukraine. You don't even hear about Ukraine anymore. I showed you on that meme was a meme, but it's true. You don't hear anything about it. Okay, you don't hear anything about Azerbaijan and Armenia. Israel was involved with that. Israel and Iran. Okay, so this is what he's talking about. These things have bigger effects. So why are we sticking our nose? What strategic plan, what strategic necessity constitutes of who in the heck is in charge of the Donbass? Unless you're running them, some other big plan of, trying to control the world's resources and trying to, the plan was break up Russia into these little 15 different provinces, pick them off one by one, put in the rules-based order and strip mine the resources for the bankers and the corporate class in the West. And now we're getting ourselves involved in this ethnic conflict. Now we find out we don't have enough ammunition or shells. Well, Israelis gave their shells to Ukraine. Now we got to hurry up and send these C5s over to Israel with more shells because they don't have. I mean, this is crazy. This is just nutty. And, I know that people feel apathetic. They feel powerless. What can we do about it? I've told you what you can do. You can live your best life. You need to unplug. You stop watching TV. Stop going to these NFL games. Stop giving money to people that hate you. If 40% of the people cancel their cable tomorrow morning, believe me, people would sit up straight. If the NFL stadiums were empty, people would sit up straight. Okay? But that's not going to happen, right? Because, hey, what can I do? It's entertainment, got to have something in my life. So I get it. What I don't get is this bloodlust that all of a sudden comes out of people without any thinking about what the possible consequences are. You can mess around with a place like Afghanistan for 20 years. You go against a country like Iran, this is a population of 100 million people, a country that's been, a civilization for 1,000 years. You're hunting big game now, as Doug Casey says. This isn't going to be, a pushover. You're just going to fire a few cruise missiles and call it good, call it mission accomplished. You started up with these people. These people live by the blood feud. Okay. And you're going to have all kinds of repercussions from that. So we didn't learn our lesson over the last 25 years in this country? Evidently not. So I'll stop now because it's just, again, I don't want to get too worked up about it. Again, that's my position on it. I think it's unfortunate. We should pray for the people. We should pray that the war stops and that some kind of reconciliation can be found. There's going to be a lot of innocent people on both sides killed. And, there's really nothing you can do about it. Getting outraged about it or advocating for starting up a bigger conflict in the Middle East seems a little bit nutty to me. I guess that's really what I wanted to say. All right, guys, that's it for this week. Appreciate the support and hope that things calm down, but I suspect that we are in as we said before in previous videos, the age of disorder and chaos. So I suspect things will probably get worse before they get better. We'll talk to you soon. Thank you.